Hello students and welcome to the lecture. So students, as you can see here that basically in this lecture we have scheduled an Indian economy for the discussion. Okay. And basically we are going to talk about the Indian economy part 1. Alright. Basically within this part of the Indian economy, that is what we are going to cover. We will have a discussion over these topics. Like the first is the Indian economy. Second is national income of India. Third is planning in India. Within the planning of India, we will have a discussion over the 5-year plans. Thereafter, demography of India. Within this demography of India, we have 4 stages of the democratic transition that the India have faced off. Thereafter, important data related to the census 2011. Okay. After this, we have the Human Development Index HDI. Thereafter, agriculture. Within the agriculture, we will see the major agriculture revolutions. Okay. After this, we will have the discussion over the industry. Then we will discuss about the Indian currency system. Within this, we will have a discussion over the printing of securities and minting in India regarding the currency. Thereafter, we will discuss the demonetization. And then we will have a discussion over banking in India. Within banking in India, we will discuss about Reserve Bank of India, role of Reserve Bank of India, payment banks, mudra banks, all India financial institutions at a glance. Thereafter, insurance sector, we will discuss this, and then Indian financial system. So this is the picture that we are going to unveil in this particular lecture. Or we can say all of these are the topics we are going to discuss in this lecture. Before starting this lecture, there is a small disclaimer for all of us. And as per the disclaimer, we can say the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and the owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. Okay. So now let's start the discussion over the Indian economy. Okay. So basically, if we talk about the Indian economy, first we have to talk about the economy. What do you mean by the economy? So economy in the general sense, you can say is a activities. Okay. Like producing something, consuming something, distributing something. And all of these activities of producing, consuming and distributing, these all requires the resources that are oftenly considered as an economic resources. And when we consider it with the nation, then they are called as national economic resources. Okay. So economy is all about like this. And Indian economy is basically the part of the economy. Or we can say when we merge the India with economy, then it's become the Indian economy. And in order to take the introduction of the Indian economy, we can say that the India has emerged as the fastest growing major economy in the world as per the Central Statistics Organization CSO, okay, and the International Monetary Fund IMF. Here remember, the Central Statistic Organization is the Indian organization that looks after the collection of data related with the economy. Okay, and then they publish the various reports, which even including the forecasting the economic development in India during a certain period of time. Whereas the International Monetary Fund IMF is a voluntary fund gathering organization that gathers the fund from its member and often lends the fund to its member for short term. Okay. So the government of India also has forecasted that the Indian economy will grow approx 7.1% in the financial year of, please correct this, 2023 to 24. And this one will be 4.2%. Okay. So we can say that basically after COVID, okay, that hit the entire world during the December 2019. And then we know during the 2020, major economies and the world countries have faced the lockdown period. Okay. Because of the COVID. And during the lockdown, when the people movement got restricted, economic activities also get hampered and economic activities also get restricted. And because of these restrictions, all the three prime activities in economy like producing, distributing and consuming, all these prime activities got stuck. And because of this, many countries of the world suffered a lot. Even after upliftment of the lockdown after the 2020, still there are many countries in the world which could not even recover themselves from that stagnation phase. But however, we are lucky that Indian economy, after suffering a huge losses during the lockdown period, recovered that fastly that basically it is one of the 4 or 5 economies in the world that are having the growth or the positive growth. Maximum economies in the world are in negative growth rate. Okay. But India, China, Russia, and some other countries, these are the countries that are showing the positive growth rates. Okay. In economy, mainly there are the three sectors on which entire activities have been divided. Like as I have told you, economy is generally considered the producing, distributing and consuming. And this includes the various kind of activities that are surrounding us. All these activities are generally classified into several things. Okay. And this classification is oftenly called as the sectors. All right. And these sectors are termed as the primary, secondary, and tertiary. Okay. However, there are the 5 sectors when you go for the higher. It means primary, secondary, tertiary, quaternary, and quinary. Okay. But generally, we study about the 3 sectors that are primary, secondary, and tertiary. Okay. So if we start with the primary sector of economy is involved in the extraction or harvesting of products from the earth. Some of the activities are like agriculture, mining, forestry, and research. So basically, generally, when the primary sector comes out, the people start thinking of doing agriculture. And beyond agriculture, they do not consider the other activities into the primary activities. But this is not correct. The primary activities, however, often used to depict the agriculture, but generally, these activities including the extraction or harvesting. It means when you are extracting something from the earth or when you are using the earth's natural resources to harvest some products, then sell them off to earn your livelihood. These activities are called as the primary sector activities. Like in the agriculture, you use the natural source of soil to grow the crops and then you harvest them, cultivate them, sell them, earn your livelihood. Mining. During the mining, we know we extract the minerals from the earth and then we process them, convert them into the metal, non-metal or metalloids, then send them to the market and earn the living. Forestry, we know various kind of natural produces that has been collected from the forest, which are provided by the earth. Those collection of the things sell off to the market and earns a livelihood for many people. Thereafter, the secondary sector of the economy. So, the secondary sector of economy involved in the production of finished goods. Activities including the metalworking, automobile manufacturing, textiles, and etc. Here is a little bit change that we could make. That secondary activity including the finished goods, but not always depicting the finished goods. What I'm saying? Secondary sector including the finished goods, but not always depicting the finished goods. All right. They may even have the intermediate goods. So when the good produced in the factory and sent to the end consumer, and the person is going to directly consume it and not selling it further, then the good is called the finished goods. In intermediate goods, one unit manufactures the good, supplies to the another unit. That unit will use that good in their manufacture, then supply it further. Then intermediate and finished. Both type of goods are the part of the secondary sector, not always considered the one type only. Thereafter, the third is the tertiary sector. So the tertiary sector of economy is also called as the service sector. Okay. Some of the activities which are the part of this sector are retailing. It means that the shop owners, the showrooms, you can say the complexes, are they producing anything? No. They just purchasing the things from whom? Those who had produced the things, and then selling it to the end consumers or the intermediate consumers with some their profit margin, and that's how they earning the things. Transportation, like carrying you from here and there, they charging a fees, that is their livelihood. Banking and all. Okay, this is the sectors of the economy. After finishing the discussion over the sectors of the economy, now we are going to talk about the national income of India. So if we talk about it, then we can say national income is apart from the individual income. Why? Because national income is the net value of all the final goods and services produced by the national during the financial year. It means from the time period of 1st April to 31st March, whichsoever good has been produced by the Indian nationals, those all goods would be their final value will be the national income. And national income is apart from the GDP. GDP includes nationals and non-nationals both. Like GDP includes the final value of the goods and services that have been produced within the territory of India. Doesn't matter from the nationals or from the international organization. Okay. Whereas national income exclusively involving those goods and services only which are being produced by the nationals. For example, suppose rupees 1000 crores is the final value. Out of these 1000 crores, the 300 crores have been added by the foreign companies working in the country. So those 300 crores will be the part of GDP. But because those 300 crores not produced by the nationals or the internationals, so that's why those 300 crores will not consider under the national income, and national income will only be rupees 700 crores. And from national income, we calculate the per capita income also. Like whatever is the national income, just divided by the population, and the amount that you will get, that will be a per capita income. For example, if the national income is 1000 crores, okay, or you can say rupees 1000. For example, rupees 1000 is the national income, and there are 100%. Then, if you divide the value, then you will get 10. So rupees 10 is a per capita income. There are various methods to calculate the national income, and these methods are product method, income method, and the consumption method. Okay. These methods are the methods used for calculating the national income according to the convenience of the calculator. First specific attempt or scientific attempt, to measure the national income in India was made by the Professor V.K. R.V. Rao in 1931 to 1932. Remember, even before V.K. R.V. Rao, Dadabhai Naoroji during the 1868 attempted to measure the national income of India, that was rupees 22 on that time. Okay. And during this time, it was nearly about rupees 142. Okay. In 1949, National Income Committee was organized and the chairmanship of Professor P.C. Mahalanobis was heading it. GDP is an important aspect of national income, refers to the total value of all the goods and services that are produced during the given period of time, from 1st March to 31st March. Like the example we have taken, rupees 1000 crores is the final value of goods and services, then the GDP would be of rupees 1000 crores. Okay. The national income in India is calculated by the Central Statistical Organization along with National Sample Survey Organization or NSSO in India. They both combinedly calculates the national income of India. All right. After the national income, now we have to talk about the planning in India. Okay. How does the planning in India works on? What are its parameters and how this all started in the history and how do we continue it? All right. So what do we understand by the planning? That is the first. So planning means like how you are going to reorganize your resources in a manner so that you could make optimal uses of them. Suppose we can say you have a land, okay, agriculture land. How you could use it to produce it maximum. So various aspects you will be considered, like the weather of a place. According to the weather, you decide the crop, irrigation facility according to the crop, then other kind of things. This is similarly happens in the planning. In India, we have a various economical resources, right? How we are going to utilize these resources so that we could obtain the maximum of it. This is what we call as a planning. Okay. Tracking down the history of it, we can say it was 1988 during the British colonial rule. All India Planning Committee was formed and the chairmanship of the committee given to the Jawaharlal Nehru. Okay. In 1944, the Bombay Plan was formed by few congressmen who were the members of Indian National Congress and the other industrialists so that they could make out the growth map of India. And this Bombay Plan is also considered as very famous planning attempt in India. Okay. But it was not that much of successful because they were advocating the capitalism in the country. It means they wanted that the natural resources and the economical resources must be maintained by the private players and the government should have the minimum interaction. Whereas the All India Planning Committee and the other associated organizations, they wanted to interfere into the mapping and all, and they promoting the socialism. It means the resources must take over by the government and then the government decided how to do it. Okay. And basically there are the three prime questions in the economy. These questions are what to produce, how to produce, to whom to produce. What to produce means what kind of goods and services to be produced by using the resource. How to produce means what technique of production you are going to apply, like CIT or LIT. CIT stands out for capital intensive technique and CIT stands out for capital intensive technique. LIT stands out for labor intensive technique. In CIT, mainly the work done through the machines. In LIT, mainly we use the labor. Okay. So that was the thing. And third is to whom to produce. To upper class, middle class, lower class and all. So basically in capitalism, all these three questions are exclusively dealt by the private players. Okay. In the socialism, basically the government deals with the questions and the private players having the minimum interaction. All right. That is the thing. After independence, basically Jawaharlal Nehru in 1950 established the Planning Commission so that we could plan the economic development of India. The Planning Commission was basically an extra constitutional body that is charged with the responsibility of making some assessment of all the resources that we have in the country and augmented the deficient resources. It means if some resources were not presented with us, how we could obtain them from the outside. The National Development Committee was established by the Nehru on 6 August 1952 so that we could discuss the planning issues with the states and the union territories of India. So we can say the Planning Commission was basically at the central level. But to delegate the authority towards the state and UT, the National Development Council was also set up. That was January 2015 when Niti Aayog, National Institute for Transforming India, okay, Niti Aayog, that was established as a policy-making think tank of government. And this is to replace the old structure of Planning Commission, okay, and aims to involve the states in the economic policy making. It means that the states were not a part of Planning Commission, which were doing the planning at the central level. So that's why Niti Aayog was established so that the states could also have their representation in the planning of India so that their participation and their concerns could be dealt more effectively. The chairman of Niti Aayog is the Prime Minister, and it also comprises the Chief Minister of all the states as a member and heads of all the union territories as the members. So thereafter, now we have the 5-year plans that we have made under the Planning Commission. Okay. So first is 1951 to 1956. That plan based on the Harrod Domar model gave priority to agriculture. Economics K.N. Raj was the architect of this plan. Thereafter, 1956 to 61 plan, also known as Nehru Mahanubovy's plan. This emphasized on the development of basic and the heavy industries. 1961 to 1966 plan. It is also known as Gadgil Yojana, aimed to be a self-reliant and self-generating economy. This plan failed to achieve its target due to the Indochina War that broke out in 1962 and after the Indo-Pak War broke out in 1965. From 1962 to 1969, it was a planned holiday. Due to the unfortunate failure of the third plan, the fourth plan was postponed and 3 annual plans were implemented during that. In 1969 to 1974, plan laid a special emphasis on improving the conditions of underprivileged and the weaker sections. 1974 to 79 plan aimed at removal of poverty and attainment of self-reliance. 1978 annual plan was brought out by Janata Party under the leadership of Morarji Desai. The focus of the plan was enlargement of the employment potential in agriculture and related sectors of the agriculture. 1980 to 85 plan aimed at poverty through strengthening of infrastructure for both agriculture and industry. 1885 to 90 plan focused to accelerate the food grains production and to increase the employment opportunities. 1990 to 1992 annual plans were formulated. 8 plan could not take off due to the fast changing political situations at the center. 1992-1997 plan was also called as Rao Mohan Singh model. First indicative plan aim was to bring improvement in the human resources development in the fields of education, health and employment. Thereafter, 1992 to input-output model aim was to attain social justice, rural development, job creation with growth of equitable distribution. 2002 to 2007, plan called Comprehensive Input-Output Model aimed in the development of social infrastructure, employment and energy. 2007 to 2012, plan was known as the Planning Commission Pro Forma, aimed at job creation and availability of basic physical and educational services. 2012 to 17, plan aimed to achieve faster, sustainable and more inclusive growth. Niti Aayog established the 15 years vision plan which terminates the concept of 5-year. After this, now we have a discussion over the demography of India. So demography is the study of the size, territorial distribution and composition of population, change therein and the components of such change. 4 stages of the demographic transitions are: first stage is birth and death rates are both high. Second stage, birth rates remain high but death rates fall. Third stage, birth rate starts to fall and death rates continues to fall. Fourth stage, both birth and death rates are low. The year 1992 was a year of great divide in the demographic history of India, when mortality started to decline, leading to the acceleration in the rate of population growth. The first census in India was basically held in 1872. The first synchronized census was again held in 1881. Since then, at every 10 years, the census is organized in India. The census 2011 is the 15th national census survey conducted by the Census Organization of India. Okay. And if we talk about the important data as per this census, then in India, total population is this. Males are 623.7 million, females are 586.46 million. Population group between 0 to 6 ages, 15, 87, 89 and 287. Population density is approx 382. Literacy is 74. Sex ratio is 940 females over 1000 males. Child sex ratio is 914 girl child over 1000 boy child. Thereafter, if we talk about the HDI, HDI measures the achievement in a country in 3 basic dimensions of the human development: long and healthy life, access to the knowledge, and descent of standard of living. The United Nations Development Programme introduced the HDI in its first Human Development Report, HDR, prepared under the stewardship of Mahbub al-Haq in 1990. In HDR 2016, India was ranked 131 out of 188 countries in terms of HDR. 3 dimensions as we have just seen here. Thereafter, if we talk about the agriculture sector, this is an important sector of the Indian economy because it contributes 17% of the GDP and about 10.2% of the total export, provides livelihood to more than the half of the population. Green Revolution regarding this was launched in 1966 as a part of new agriculture strategy, initially including the Intensive Agriculture District Program IADP and later including the High Yielding Varieties Program HYVP. Green Revolution was the brainchild of Normal Borlaug in India and made successful by Dr. M.S. Swaminathan. M.S. Swaminathan is also called as father of Green Revolution in India. Achievements of Green Revolutions were rise in the production of wheat and rise and increase in the employment opportunity. If we talk about the major agriculture revolutions, Yellow Revolution, oilseed, white, milk, Black Revolution, petroleum, red, meat and tomato, round, potato, silver, fiber, cotton, Blue Revolution, fish, Pink Revolution, shrimp. Grey Revolution regarding wool, Evergreen Revolution, overall development of agriculture, Green Revolution, food grains, Golden, horticulture, silver, egg and poultry, brown, cocoa, rainbow, amalgamation of all revolutions. Second Green Revolution, change in agriculture production to feed and sustain the growing population of India. If we talk about the industries, refers to an economic activity concerned with the processing of raw material into the manufacturing of goods in factories. India having the industry sector at 28% share in overall GDP in India. Important policies launched in 1948, 1956, 77, 80 and 1991. Tacit principle of state policies called the Economic Constitution of India gave the public sector a strategic role in India. In 1991, the economic reforms aimed at ending the license permit Raj, integrating the Indian economy with the outer world, removing the restrictions of the FDI stands out for foreign direct investment, reperforming public sector and restricting the number of sector in which only government can participate. Public sector was later on promoted to capture the commanding heights of the economy, therefore to take up the strategic role in the industrialization of the country. In order to promote the public sector, different companies were categorized into the Maharatna, Navratna or Mini Ratna. 2013, new company bill was introduced, replaced the 6 decades old Company Act of 1986. Concept of Navratnas started in 1997. Present 8 Maharatnas are there, 16 Navratnas are there, 74 Mini Ratnas are there. If we talk about the Indian currency system, so the present monetary system of India is based on the inconvertible paper currency and is generally managed by the Reserve Bank of India. Present currency system is India is based on minimum reserve system of note issue, which was adopted in 1957. If we talk about this, Indian Security Press 1992 Nasik, Postal Material and Postal Stamps. Security Printing Press 1982 Hyderabad, Union Excise Stamp Duties. Currency Notes Press 1928 Nasik, Bank Notes from 1 to 100 denomination. Bank Notes Press 1974 Devas, for bank note of 20, 50, 100 and 500. Modernized Currency Notes Press 1955 Mysore, Salbani and West Bengal. Security Paper Establishment 1967 to 68 at Hoshangabad for banks and currency notes paper. Demonetization, if we talk about, currency demonetization is a radical financial step in which a particular currency status as a legal tender would be declared invalid. In India, on 9 December 2016, the Reserve Bank of India withdrew the old 500 and 1000 notes as official mode of payment. Reason for this move given was that it will help to tackle the black money and eliminate the fake currency and lower cash circulation in the economy so that other things would be tackled down. The first Bank of India with limited liability was managed by the Indians was Old Commercial Bank. It established in 1881. Subsequently, the Punjab National Bank was established in 1894. Largest Imperial Bank of India was nationalized in 1955, renamed as State Bank of India, followed by the formation of its 7 associate in 1959. Okay. 2016, Bharatiya Mahila Bank was set up and merged with State Bank of India. Bharatiya Mahila Bank is the first all-woman bank established in 2013. Social banking scheme was there and nationalization of 14 commercial banks in 1969 was conducted accordingly. 6 more banks got combined with the nationalism in 1980. All commercial banks, Indian and foreign, and the regional rural banks and the state cooperative banks, scheduled banks and all, these all are included under the RBI Act 1984 and could be nationalized at any time. Okay. If we talk about Reserve Bank of India, so basically it was set up by the Britishers as per the advice of Hilton Young Commission recommended on April 1935. Enactment of RBI Act was happened in 1934 and the first governor was Sir Osborne Smith. You can see him here. Main purpose of creating RBI was to separate the currency and credit from the government of India. RBI was nationalized in 1949 as first Indian governor was C.D. Deshmukh. Administration of RBI, if we talk about it, headquarters are at Mumbai. There are 14 directors in Central Board of Directors beside the governor, 4 deputy governors and 1 government official. Role of RBI to control the money market, act as a guardian of banks and maintaining the financial stability. Since 1952, monetary policy of RBI emphasis of twin goals. It means economic growth but also controlling the inflation. RBI controls the money market through various tools like introducing the bank rate, repo rate, reverse repo rate, statutory liquidity ratio and cash reserve ratio. Repo rate is the rate at which the RBI gives finances to the commercial banks. It is also the rate which RBI lends the short-term money banks to the against securities. Payment banks, if we talk about, differ from conventional banks, not allowed to lend to the customers or issue credit cards. Okay. Could only accept the deposit of 1 lakh rupees, could offer the current and saving account deposit, and could issue the debit cards and offer the internet banking. But other kind of things are to be followed by these banks also. Mudra Bank stands out for the micro units for development and finance agency. Rupees 20,000 crores was their initial capital and could additionally guarantee the credit of rupees 3,000 crores further. Public sector financial institution in India, it is this. provides loan at the low rates to small entrepreneurs, and it launches the various schemes like Shushu covers up to 30,000 rupees, Kishore 50,000 to 5 lakhs, Tarun 5 lakh to up to 10 lakhs of loan could be granted. All major sectors, if we consider them, first is industrial finance sector to grant loans advances to the industrial concerns and subscribe to debentures floated by them. State finance corporations to finance the need of the small scale and medium sized industries in their respective states. Thereafter, Industrial Credit Investment Corporation of India ICI 1955 to stimulate the promotion of new industries and assist in modernization of existing Mumbai industries. Industrial Development Act of India to meet the financial needs of industrialization and coordinate with all other agencies that are concerned with the industrial development and the finance. Industrial Investment Bank of India to assist the industrial unit in eastern regions. A Small Industry Development Bank of India, Lucknow, to promote the finance and the development industry in the small section. Okay. After this, if we talk about the insurance sector, consider the life insurance and the general insurance. Life insurance introduced by the Britishers in 1818 established the Oriental Life Insurance Company at Kolkata, which is now called Kolkata. Since the opening up, the number of participants in the insurance industry have gone up from 7 insurers to 4 public sector general insurers and others in 2000 to 49 insurers as per the latest data of 2011. If we talk about the financial sector of India, refers to the borrowing and lending of the funds of the demand and supply of funds of all individuals, institutions, company and of government. The IFS consists of 2 parts, Indian money market and Indian capital market. Money market is a market for near money or it is the market for borrowing and lending of short-term funds. Capital market concerned with provision of raising long funds for the maturity of 1 year or more. So students, basically in this lecture, we have finished the first part. In the next lecture, we will start with the second part. Till then, just revise the facts and figures we have discussed in this lecture. Be ready for the next lecture. With this note, let's end this lecture and thank you.